The way you view trends in land values influences every major decision on your farm. That's not just about buying or renting land. It's showing up in how you think about risk, investment timing, and even your outlook for the next year. When we look at recent survey data from U.S. producers from the Ag Economy Barometer, there's a clear divide forming in how land values are expected to move and what that means for decision making on the farm. Today we'll look at what's driving differences in producer sentiment and what it could mean for your operation. But before we get started, don't forget to like and subscribe for more updates from the Purdue Center for Commercial Agriculture. Recent Ag Economy Barometer results continue to show that overall, producer sentiment remains relatively stable. But more interestingly is what's happening beneath the headlines, beneath the surface, if you will. When producers are grouped by their farmland value expectations over the next year, a clear split emerges. Some expect land values to increase, others expect them to decline, and even though both groups are operating in the same farm economy with similar interest rates, input costs, and policy uncertainty, their outlooks and decisions look very different. One of the clearest differences show up in financial expectations. Producers who expect higher land values tend to report stronger expectations for their own financial performance over the next year. They're also more optimistic about current conditions on their farms. On the other hand, producers expecting lower land values are noticeably more cautious and more pessimistic with respect to their financial performance. They're less confident in near-term financial performance and less positive about current conditions. So land value expectations aren't just about land, they're closely tied to overall confidence in the farm business. We also saw a sharp difference in investment behavior. Farmers expecting lower land values are much more likely to view now as a good time to make capital investments, whether that's machinery, buildings, or expansion. In contrast, farmers expecting higher land values are more open to investment, even in a high-cost environment. So those that are fairly pessimistic with respect to land values are not expected to make as many capital investments, while those that are more optimistic are more likely to make capital investments. That gap matters because what farmers decide to invest in today doesn't just affect this year, it carries forward into how the farms perform down the road. What we're seeing is two different responses to the same economic conditions, one more defensive and one more growth-oriented. When we ask producers what they think is influencing farmland values in the area, the answers also differ. Those expecting lower land values tend to point to net farm income. That likely reflects pressure on margins and profitability concerns. Meanwhile, those expecting higher land values are more likely to point to alternative investments, things like financial markets or other asset classes competing for capital. So one group is focused on farm income fundamentals, while the other is looking more broadly at relative investment returns. Across both groups, high input costs remain the top concern, but the intensity of that concern is higher among farmers expecting weaker land values. We also see difference in broader outlook. Those more optimistic about land values tend to be slightly more positive about the overall direction of the U.S. economy, and interestingly, livestock producers make up a larger share of the more optimistic group, which may reflect differences in income stability across sectors. The livestock sector, quite frankly, is doing quite a bit better than the crop sector currently. So what does this mean for your operation? Land values aren't just a market number, they're tied closely to how you're thinking about risk, cash flow, and whether now is the right time to invest or hold back. It's whether your decisions are being driven by your own farm numbers or by what you think the market is going to do next. You can read more about land values and producer sentiment divide in a recent article published on the Purdue Center for Commercial Agriculture's website. If you want to explore the Ag Economy Barometer in more detail, check out the Barometer website. You'll find links to both in the description below. Thanks for watching Purdue Commercial AgBrief. If you found this useful, subscribe for more research-based insights, and we'll see you next time.